Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games companies play. Today we are diving into a filing that tells us about some important changes at Johnson Controls. This is a report from Johnson Controls International PLC, a big name in building technology and sustainability. It is a type of filing called an 8K, which is usually for big, unexpected events. The main news here is a leadership change. Nathan Manning, who was a big boss in charge of their Americas business, is stepping down. This isn't just a simple goodbye though. He is going to stay on for a bit as a special advisor, which is pretty common to make transitions smooth. Taking over his role will be Todd Grabowski. He's already involved with their global data centers and equipment business. This move signals a shift in how they're managing their operations in North and South America. Now, let's look at what this company is trading on the stock market, because that tells us what investors are interested in. They have ordinary shares, which is just a fancy way of saying regular stock, listed on the New York Stock Exchange under the ticker JCI. Beyond their stock, Johnson Controls also has a lot of different types of debt called notes. These are essentially loans the company has taken out that they promise to pay back. For example, they have notes that are due in 2026 with a 3.900% interest rate. Then there are other notes, like the 0.375% senior notes due in 2027. The interest rate here is really low, which means they repaying very little to borrow money for this particular debt. It looks like a big focus for them is sustainability. They have these sustainability-linked senior notes due in 2031, where the interest rate is tied to how well they do on environmental goals. That's a really interesting trend in the corporate world today. And they have some very long-term debt too, like these 6.950% debentures that won, to be paid back until the 1st of December 2045. That is a long time to owe money. The filing also asks if the company considers itself an emerging growth company. Johnson Controls is a pretty established business, so it is checked as no here, which is expected. Finally, the report is signed off by Richard J. Dancy, who is the Vice President and Corporate Secretary. This is standard procedure to make the filing official. So what does this all mean? Well, the leadership change is a key event. Nathan Manning leaving his role as head of the Americas business suggests they might be looking to shake things up in that region, or that Manning himself wanted to pursue new opportunities. Todd Grabowski taking over means a new strategy might be implemented. The raft of debt issuances, especially those sustainability-linked ones, show that Johnson Controls is actively managing its finances and trying to tap into investor interest in green initiatives. The long maturity dates on some of their debt, like that almost 20-year debenture, mean they are planning for the long haul. While this report doesn't give us the nitty-gritty financial numbers like revenue or profit, it does paint a picture of a company that is evolving its leadership and its financial structure. We all need to see future reports to understand how these changes impact their actual performance, but for now, it is a sign of active management. What is your take on these leadership changes and the company S-debt strategy? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up, and don't forget to subscribe for more corporate deep dives. Also, join our Discord community linked in the description for more discussions. Thanks for watching.